Welcome to Ventures from the Valley, a podcast by R136 Ventures. This is the show where we highlight the biggest topics in business and investment with some of the biggest experts in the space to help you learn how to grow your portfolio in venture capital. I'm Victor Orlovski. Hello, dear friends. This is another series of podcast Ventures from the Valley. I'm Victor Orlovski, and this podcast is brought to you by R136 Ventures. Today, we are going to speak with two exciting gentlemen, Philipp Reineke and Mohammad Rasouli. These are my friends from Stanford University, the founders of a startup, AIx2.ai. The startup is all about developing a tool that would automate the entire work of private equity investment manager and analyst. So let's speak with Philipp and Mohammad about AI revolution, Stanford, and much more. Let's go. So these two gentlemen whom I met at Super Return Berlin and who really had a very interesting, I was excited by their pitch on the stage and amount of interest shown by investors to what they are doing now, but we will come to that a little bit later. So thanks, Philipp and Mohammad, for joining me in this podcast, which I run so far. Thank you. So just let's start with introduction. So Mohammad, Philipp, if you can just shortly introduce yourself and what brought you to Stanford and how you guys met. So I would like to hear like version of of you. How did it come?
Well, I can start my story. So I finished my PhD in electrical and computer engineering. I was at the time at the University of Michigan, and my research was on AI for marketplaces. And for that, I was doing dual degree of economics, because you can imagine these things, if you want to do a research, are interconnected. And my research thesis was a combination of my own advisor, Demosthenis Sterketsis, who is one of the leading minds behind multi-arm bandits, which is an AI algorithm, as well as Paul Milgram from Stanford, William Hogan from Harvard Kennedy School, and also Moz Daglar from MIT. So I finished my PhD. Then Paul said, "Hey, there's a position for you in Stanford." And I did join management science and engineering in Stanford. I remember at the time, I actually had some good alternative options in the industry, but Stanford is really interesting as an academic institute, which I'm very happy to the offer.
Thank you. So how long are you with Stanford now?
I joined in 2018 as a postdoc in management science and engineering. I was there for 4.5 years as a postdoc, and then I was out of Stanford working industry. But I remained while I was in McKinsey working for 3 years, and 1 year after. I have always been a visiting scholar in Stanford.
Okay, interesting. So what about you, Philipp? What brought you to Stanford? And
yeah, so I came to Stanford as a PhD in 2019, also management science and engineering. So went through my PhD program, doing research in decentralization and also AI ML, and how to use it to make managers more effective, managers and researchers. And that's where Mohammad and I met. You asked the question before as well. So this was before COVID, in the office, we were the only people who were staying later than 10 p.m. And so we kind of started talking to each other there. And we've known each other ever since.
So you had this famous 100 hours a week schedule, right? Which is well known in the Valley for hardworking individuals.
Maybe 80, but 80, but poorly paid.
Okay, that's great. So since you are both in Stanford, so I would be very much interested, Mohammad, in your vision of how Stanford is different from Michigan, and or how would you just score it? What is better in Michigan for you, and what is better in Stanford? So how would you just label it?
Yeah, that's a very good question. Across the academic institutions I was exposed to, like MIT, Harvard, Stanford, Michigan, I would say Stanford has a very unique mode of operation. And that unique mode of operation is two main factors. Number one, as everyone can imagine, is very close to the industry, right? Even Paul Milgram, like the person I was working with, and he won the Nobel Prize after I finished my PhD, by the way, not from my research. This is what, and he's also has his own company, serves the industry, and stays close and does his research intersection with the industry, right? So that's like number one. The second thing that is important about Stanford is that it's very interdisciplinary, right? Just look at management science and engineering, the department that both Steele and I were in. It's a mix of people who are doing research in strategy and management, as well as hardcore applied mathematics, as well as AI and coding and optimization. Bringing these people together in one building is something that you can see in different parts of the campus, and it really results in innovation, right? These two modes of operation, like crossing the boundaries, the predefined boundaries, and allowing people to be very close to the industry, and in fact is what has been driving Stanford in the last, let's say, 30 years, from a less known school into one of the leading schools. And I'm optimistic that Stanford, in terms of all the metrics like Nobel Prize and others that you want to count it, as well as the amount of industry impact, it's going to be successful in coming years. Having said that, I really enjoyed Michigan in the sense that it was a public school. It had some different demographic of students. The support it had for students. It was one of the top-notch public schools, very successful in running the school as a public one with the results it has.
Look, if you have a choice between, say, MIT, Harvard, and Stanford, so you are accepted to all three, what would bring you to other two than Stanford? Why would you not choose Stanford? For what reason?
Mm-hmm. That's a good question. So MIT and Harvard have very strong legacy and connection to areas of the society, particularly like governments and some certain labs that is driving them forward. And that connections is not the same strength, connection with DC, connection with certain labs, historically and legacy. MIT has a very strong discipline of engineering. It's fair to say they have been leading engineers in 1960s and 70s in terms of progress we have had. And Harvard, I like the fact that they are very, especially the Kennedy School. I was working with William at the time for my PhD. This is a very strong government school, and they have those strong connections.
Okay, thanks. I'm sure that many of my listeners, they have at least kids. If they do not consider themselves, then their kids are considering to choose among those great schools. So, Philipp, what about you? I know that you had really great experience with INSEAD and a bunch of European colleges and universities. So what's your opinion how Stanford is different from say, European schools and education?
Yeah, I think maybe the difference is that, as Mohammad said, it's very decentralized. It's very interdisciplinary. There's a lot of kind of like collaboration between different departments. The schools that I've been to in Europe, they were also excellent. But more focused on like kind of one field. So I studied at London School of Economics, which is kind of more business focused. And INSEAD, I was doing mostly kind of data science type of tasks and research tasks, but also a business school. And I mean, that has some benefits because there's more focus, but there's less of this like interdisciplinary kind of feeling and culture that kind of drives Stanford and drives a lot of the innovation, because we just don't have extremely good kind of coders and business people and people with like, very deep expertise in a specific discipline, like, I don't know, medicine, chemistry, something like this, all in one place. And so you kind of lose some of these interaction effects that you get from that. On the other hand, of course, like some of the really big benefits, especially like INSEAD, is it's a bit more secluded. So I think the culture that people build there and the kind of connection, especially in like MBA cohorts, is pretty strong because they constantly interact, because that's basically the whole idea of having everything in one place that's a little bit further away from like, major kind of like metropolitan centers, especially in Fontainebleau, which is close to Paris, but also not directly in Paris. So you get this effect of having a stronger connection with the people there.
What's the if you name one thing which you're desperately missing in Stanford and surrounding areas, what would that be?
I mean, from INSEAD in the area, yeah, I mean, maybe Paris, which is an amazing city. So you get like, kind of all the art, all the culture, like the beautiful city. I mean, San Francisco is nice as well, but I would still say probably Paris is a bit nicer.
When we were to a tour, like a college tour with my elder kid to Princeton, and Princeton students were so much excited to tell about how wonderful Princeton is. Then I asked a girl who was just presenting Princeton what she's missing. She said, "Oh my gosh, I can't wait when I just finish to go back to New York City." So that's exactly what you miss in Stanford, right? So nothing really close to, right? I mean, just no big city, no bars, no social life. Everything is shut down at 9 p.m. or earlier. That's really all about like this place, really nice place, but still missing a lot of stuff. Okay, that's interesting. So coming to this AI and everything related to Gen AI, how much you think Stanford is in a cutting edge of Gen AI revolution? Is it gonna be the same as it was for semiconductors, telecom, mobile, Uberized economy? Do you think that Stanford is going to continue to lead this? How different is with, say, UC Berkeley, competition-wise, or other US schools, maybe also the UK schools like Oxford? We know that a bunch of great Gen AI engineers and mathematicians came from that part of the world as well. And also, if you may compare it with Chinese efforts on advancing on AI, so where do you think Stanford is? Is it like number one, number two, or among many?
So it's hard to rate like by which metrics we measure. I did a count on NeurIPS. NeurIPS is the number one AI conference in terms of publication. I did a count on which institutes are the most publishers. And interestingly, the most publishers are actually Google and Meta. And then it comes to academia. This was a year I had a paper in NeurIPS myself. It was 2021. So if you look at from that angle, like publication, you can see that there's a strong presence from the industry, particularly the tool Google and Meta I mentioned. Nevertheless, among the academics, you can see that Stanford was the top one, number one, and then it goes to the others. The reason Stanford is doing good is, to my opinion, is connection to industry. And as I said, industry is leading AI for the matter of access to processors, access to data, and a lot of other things. So having said that, like the development of AI is twofold. Some of that are like research and good ideas, which is always the fundamental ideas. And then a lot of that is like just taking them to application, applying to many, many data sets. And it's very important to look at AI and see what has been driving the AI in the last 15 years. If you look at all the breaking points from the MNIST to ImageNet to the recent large language models by ChatGPT, it has been application of larger order of magnitude data to deep learning, deeper and deeper neural network systems. So getting larger and larger data to deeper and deeper networks, that has been the major breakthrough one after the other, right? And we saw the recent one in GPT. So that is something that eventually it's more and more affordable by the industry rather than academy. Having said that, I think Stanford is at the cutting edge of this. And about comparing Stanford with other institutes like Berkeley, for example, which is close to us and in the same Bay Area. I did have a paper with Michael Jordan from Berkeley, who is a leading AI professor. He was leading the ECS department, statistics department, as well as the chair. And my paper with him was actually pretty interesting for me as an exposure to Berkeley. You can see that these two campuses have slightly different focus or strength points in AI. Berkeley is, for example, more on robotics and reinforcement learning. There are amazing people working there. And Stanford, people like Pei Li and others who have been the focus on image detection and other technologies driving that forward. So there's a slightly like different strength points or focuses historically, but they are very good in working together. Even like they recruit each other as students, so they pass and share the disciplines and knowledge together. So I think that these two institutes are doing great job working together.
You know what? I have just a follow-up question here. So my son is at Berkeley. He's a senior in undergrad. So and he's working in one of the labs. And I spoke to his professor recently, and I asked him what like disturbs him, what makes him like unhappy about like research going on in Berkeley. And he was very sharp in that answering that question. He said, what I really dislike is this amazing competition going on between teams. That when he started like a decade ago, it was a collaboration, like everyone was collaborating among like students, professors. Now, like every group is competing like crazy on research, on not only funding, but just, they're like trying to like hide away everything, like do it in a very secretive way, like every research, every paper being published. And there is an extreme competition going on. And he thinks that it's like extremely bad for the industry and research overall, because it actually, I mean, the whole research and education about that is, and science around that is all about collaboration or competition. Do you feel like it is the same in Stanford? Is it the same thing, or it's kind of different?
So this is a very good point. I think competition generally in Bay Area is the mode of operation. People compete with each other. At the same time, they cooperate in different levels, so they know that collectively you're going to grow. But the competition is high in AI. It's really a competition. And people say that NeoRIP's publishing in NeoRIPs is the top-notch conference, and the other conference as well is a blood battle with very low success chance and getting there. But I think that competition actually drives forward the entire industry. I do believe in competition and the society we have around peaceful competition, especially when it comes to science, while having IP and protecting your results and having the
even in science and research, right? So you would support competition in science and research too, right? So you are kind of doing well with this.
Yes, I do believe that as well as it's a peaceful competition that basically is sharing your result and owning the recognition as a researcher, but yet sharing with others that they can quickly build on top of that. If you look at like Archive, what is Archive? Archive is in the last 10 years, a new mode of operation for AI. They don't wait for conferences to publish their Archive is a website that they publish their papers even before it's published in a conference. And they basically share it with everyone, every researcher out there. And that level of sharing fast and quick has resulted in very fast progress in AI compared to other disciplines of bodies of knowledge, right? So that has been like sharing the knowledge with the others in an open source way has been leading to tremendous success for AI and computer science generally. But yet you do have the reward of your research. Once it's in Archive, it's recognized for you and your knowledge and your contribution to the science. This is the most important thing for a researcher, for an academic person.
Okay, thanks. Maybe last question on research, and then we speak about AI product you are developing and then future of AI. When I look into some public data, I see that China is producing a lot more patents around AI. Gen AI, a lot more white papers, a lot more research, at least publicly available. Do you think that China is ahead of the US in that respect? And how would you just compare stage of Gen AI development in China versus the US? So who is winning, who is losing, and why?
I don't think I'm completely aware of the Chinese AI. What I can say is I have seen some frameworks from my colleagues, my researcher colleagues, frameworks of state of AI in different countries. And at that framework, there are many standard frameworks, like Stanford HCI has one framework and one report that publishes annually. But it depends on which framework you believe in. It's just like different frameworks for assessing academia and universities. So, right. But these frameworks, a lot of them are like the number of publication, amount of data generated, commercialization and others. And if you look at that, you see that generally China is doing a great job in generating the data just because the massive amount of like population they have and resources they have. And I would say generally easier regulation for generating these data, especially when it comes to healthcare and some other disciplines, right? China versus US. And the data is a feeding in the research finally, like ultimately. Nevertheless, if you count really the papers of AI in top-notch conferences and like fundamental research, then that's where you see the US leading and really developing those breakthroughs for all sort of AI algorithms, even people daring to talk about replacing the entire neural networks with new algorithms, like people in Meta are working on that, and Jan LeCun and others. They're saying that the entire AI we have is going to be replaced with a new AI algorithm, which is very like brave way to do research, fundamental research.
Okay, thank you. So let's switch to the main, your baby, right, which is AIx2.ai. So that's an interesting name. If you may just describe what you are aiming to do, what's the end goal? How would you envision your product in a stage when it's like developed to its maturity phase?
So the vision we have, let's say for AIx2 5 years down the line, is basically mapping the entire alternative investment data into some sort of a structured database. And we have graph database, and vector-based databases for that. That is fitted with an intelligence layer on top of that, such as recommendation algorithms that allows the investors to get directly recommendation for the deals in the market, as well as like sharp insights on upside and risk of these deals. Therefore, AIx2 is here to transform the alternative investment from private equities, VCs, pension funds, and others to the layer that there's less friction in the market and less inefficiencies in the market, and result in a more faster, higher performance, higher return on investment, and more liquid industry. That's our vision long-term, like down the line. And it's rooted into our own PhD research times, like the work that we have done in this space, as well as when you are working in the industry. I was in McKinsey. I was leading the AI transformation for private equities from McKinsey New York office. And I could observe how things are mundane and inefficient and manual that AI can really come and take them over, right? So starting from, that's basically our vision 5 years down the road and what we try to bring to the industry.
Is it going to be a replacement of a human being, whatever analyst, manager, investment professional, or an extension? Is it a co-pilot, or is it aiming to replace managers, investment managers from their jobs?
So it's some part of this industry is never going to be replaced by AI. At least that's my vision. For example, making connections, shaking hands, finalizing those investments, and very high level complicated reasoning that is still AI is not yet there. So a lot of things are going to remain for humans, and humans are going to have more free time to do the real job. It's just AI in this space is similar to some other industries, like invention of engines or wheels or railroads, a lot of things that saves humans energy and power to do real added value versus mundane job and inefficiencies. So in that sense, yes, part of it is going to be replacement, but the mundane jobs, and a lot of that is going to be opening time for humans to do more added value. And some part of that is going to be overlap and human in the loop for better results. And there are some research, there's a joint research at Stanford and MIT that shows that if you give investors a prediction of the market 100 down the year, the closing price for S&P, and you ask senior investors, you ask machine, and you ask the mix of junior investors and machine, the mix succeeds and gets the best results in terms of predicting market, the mix of junior investor and machine compared to machine only or the senior investors. So I do believe in that mode of operation between human and the machine, especially in certain areas in investing.
So you think it will be more a co-pilot, right? A co-pilot for investment professional who will enjoy doing this due diligence, if you will, and research on whatever companies are faster, more efficient, and with less mistakes, right?
Yes, that's first.
And where are you now? So what the product is capable of doing now? So
in the roadmap we have to the vision I described to you, we started technologically by starting by single fund, right? Down the line, as it was, I guess, clear from our vision, is we want to map the entire alternative investment data, everything that's available on the web, everything that's available on the third-party databases, everything that's available on your proprietary data for you. We have started by giving funds access to web-based information and their property data, not mapping it as completely as a structured graph, but mapping just for their own unique purposes, which is due diligence, investment memo, writing the LP recordings and others. Basically, the machine connects to their database, their property data, as well as the web-based information, and they can ask any question, right? The machine does not yet recommend them the deal. We are releasing that version in the future, but the machine is able to answer any question they have about certain topics, certain deal, market trends, or even certain LP or GP.
Okay. So when you actually bring this intelligence, I'm just thinking loud. So what would it mean for the market overall? I mean, probably it will make all funds equal, right? Because if you all are going to use the same product or same type of technology, now your intelligence doesn't really play that much role because you do it all with the machine. So probably it will just equalize somehow, make parity between funds, right? So there will be no extended knowledge of someone who knows something better than others. So probably just will bring more competition, right? So more qualified, better deals for everyone. Basically, is that the right assumption about what the future of?
So it's as you made a fair statement. To answer this social equilibrium impact for the impact of this technology, I should basically put my economics hats back on, and then speaking as an economist who realizes this social equilibrium and social welfare in aggregate, what happens to that? The answer is, at least the way that we think about it, is that in average, everyone is going to win. Everyone is going to be better off. And it's basically rooted back to the perfect economy, perfect market, perfect competition theory, which says that if you can reduce the inefficiencies in the market, reduce the inefficiencies in the marketplace, it will result in better deals for everyone and higher social welfare. Higher social welfare means that in average, everyone is better. The cake is large, right? And that's exactly what AIx2 is trying to do. You're trying to reduce these frictions and make sure these deals are matched efficiently. It's a two-sided matching, right? A good deal for one VC or one private equity is not exactly good deal for the other one because of the unique investment thesis people have, capabilities and operations that they have, and other ways, right? Their portfolio diversification and all of these included. So these two-sided matching, if we do it more efficiently, that's exactly what our intelligence layer does, what our recommendation algorithms do once we release them, is going to result in a more efficient industry, more liquid industry, which means more congested marketplace and economy, faster deals, and eventually you will see higher deploy of capital to where it's needed most, which means larger growth, better economy, and larger piece of cake for everyone. Naturally, some people may lose their information advantage or others, and AI is a competition, so you are fair to say that. But in average, people will be better off.
Yeah, and maybe to add to that, like I think on your question on competition, it would just shift the competition into more useful areas. So it would shift competition away from I lost out because I wasn't aware of this deal, to, okay, now I can spend my time like making relationships with these people, getting the deal in the end, actually, which is kind of the core competence of funds rather than, sifting through kind of data to find some kind of mid-market company somewhere in the Midwest. So you basically spend your time competing in more useful feeds for your fund and for society, as Mohammad said.
And how big is the market, you think, Philip?
Yeah, so that depends a little bit on how you see it. So I mean, the alternative investment space, if you look at it in terms of AUM, it's more than $16 trillion and still growing. I mean, at the moment with the high interest rates, growing a little bit less strongly as it did the last couple of years, but still, like some estimates are like it's still continuing to grow.
I'm more about this software market.
Exactly. So I was coming to that because there are like different ways of trying to price your products, right? So if you go with like normal B2B SaaS pricing, which is like, per month, we estimate it's larger than $30 billion, just for some of the funds, actually, like only private equity, hedge and pension funds. So they're more than that. But if you then look at how the pricing is kind of developing in this space, in the kind of AI space, people are more and more realizing that actually per seat pricing might not be the best way of doing it, because like the more effective this AI is, the fewer seats you're basically selling. So in the end, I think we're going to a place where you will have more value-based pricing, where you're like making different business model, where you're pricing based on the value that you deliver. And in that case, then the market kind of shifts from trying to sell kind of subscriptions to trying to get a part of this AUM wherever you're creating value. So there, then the market size can potentially increase. Sorry?
Right. Do you think pricing it based on a success fee, that you take part of the carry or part of the capital gains?
Exactly. So at the moment, that's not super realistic, right? Because the standard is just per seat pricing, and it's quite difficult to convince anybody to do anything else. But I do think in a couple of years in the future, like this kind of performance-based pricing might be more common. And in that case, like you have access to a much larger market because, your upside isn't really tapped anywhere.
How do you price now?
At the moment, we do per seat pricing because that's just the more understood way of selling in this market.
Mm-hmm. And do you like face any competition now? I know a bunch of the folks who are trying to do it like internally, like in-house for themselves, employing bunch of engineers. But other companies on the market which are trying to like penetrate this market in private equity space.
Yeah, I think there's also a more kind of, I guess, nuanced answer to that. So a couple of funds have been doing this internally. They're luckily not competition because they're not going to give this to the market because that's their internal alpha generation, right? Like the huge funds like I don't know, KKR and EQT and so on. They have their internal engines, but they're not competing on the market because they actually don't want to release this because their leverage is basically the alpha that they're generating through these engines. So they're actually more use cases than competition. At least that's how we see these internal teams. There are a couple of players that are trying to do kind of inside instruction from documents and so on and VDRs. And so in that kind of like initial phase, as Mohammad described it, of the product, there is some competition. But kind of the longer term vision, like the kind of like plan that we're going towards, I haven't seen many companies that are trying to do that. I mean, correct me if I'm wrong, Mohammad, but I don't think that there are so many people there. And I mean, the initial phases of the industry where there is competition, actually, the good thing is, like any kind of technological difference between the companies is also going to be, kind of equalized a little bit there. So for example, like type of rack technology and the kind of stuff where you're drawing on LLMs, like LLMs are just increasing and rack technology like Amazon and Azure and so on, they're starting to use those. So this is becoming less of a differentiator there, which is why we're quite optimistic that we can use all of these really like cool new technologies that are coming out in future stages of the product that are where it's basically a green field at the moment.
Okay, that's interesting. Maybe you can just, if it is possible, just open some numbers about the company. I mean, are you venture backed already? Did you raise your first capital? So what's the stage of your fundraising at this point?
So AIx2 has not funded yet. AIx2 has been bootstrapped for two reasons. Number one, we are very much focused on customers and generating the value and developing the product. And we have had our own corporate life experiences like in Microsoft, in McKinsey, and other places. So we didn't really need that. But importantly, like the rapid growth of this technology, which allows for building these products in a very rapid mode and less like an requirement for venture-backed movement for startups is important. That's why the thesis that if you have followed Sam Altman, he's like about a $1 billion company, right? With all the developments in AI. So that has been our mode of operation. Having said that, AIx2, for the longer vision that we have, that is basically mapping the entire industry and data into the graph, structured data databases, and using our proprietary algorithms, intelligence layer on top of that. For that, we do look for good partnerships in terms of investors and angels or VC that can really bring their experience to the table as well.
Mm-hmm. Do you already have customers on the platform?
We do have funds who are using our platform, and they're using it for interesting use cases across the board. And we do work very closely for them. I guess we are proud. AIx2 is very proud that we work very closely with those people who partner with us and make sure that they successfully integrate AI in their platform and ramp up organizationally, scale up organizationally, something that others lose. And that's part of our DNA because we were in the AI transformation strategy for McKinsey and others. So we know how to do that. And we are proud to have R136 as one of our great customers and clients and partnerships who basically has done a lot of great job with AI and very close with their AI team, impressive technical team. And I know they're already using AI for their due diligence, market research, and others.
Thank you for mentioning it. Actually, that's what I wanted to say, that yes, at least you have one customer, which is R136 Ventures. That's true. And we are collaborating with Mohammad and Philipp really, really very intensely. If we are talking more about like early stage startups, where you have like team, and team, right? Three most important items you assess. People, and people. That's all about people in early stage, right? So, is there any technology you think gonna be available in the nearest future that would enable a good basis for prediction for successful teams versus unsuccessful teams? Can AI be capable of assessing teams in a way? Maybe it might be surveys, questionnaire, maybe it might be a camera, smart camera that just sees how people like behave. Maybe this is a body language or facial recognition. There is a gentleman who is a friend of mine, Michal Kaczynski, who is a professor at Stanford, who can predict a character of a person looking at his or her 20 posts and 20 pictures in Facebook or Instagram. So do you think, I always ask him, just tell me whenever you just have this prediction engine to take a picture of a person, and then you know that this is a great founder. So do you think that Gen AI is capable of evolving to this kind of sophisticated psychologist, if you will, that would make a good prediction about people and teams?
I mean, probabilistically, in some way, it can probably give you some information, right? As you said, you can get information from videos. I think a lot of information you can just get from LinkedIn as well. There's some signal in how people's careers have evolved. We've seen some funds that are using actually kind of that are basically using LinkedIn for their own due diligence, at least. So they look at kind of the founders, their backgrounds, their and the kind of pitch decks and materials, like the data room of the company. And then they use AI to basically find people from their networks that are good in evaluating that person and the company, basically. So you use AI in kind of a roundabout way. But there are some funds that are starting now and that has been been built in the last couple of years. And the entire thesis is that they can completely automate the entire VC investment process. I don't know how well that works yet, but there are some people who are quite confident about it. And a couple of larger funds claim that they have investment engines that are using kind of this type of data successfully and have made successful investments.
We are not investing as a fund in early stage yet, but I'm investing as an angel. And I have a certain experience of more than 10 years of investing as an angel. And I do now see, I can probably recognize in few hours of talking to a person, or at least few weeks communicating to a person, whether this person is a good founder or not. But I was trying hard to really put it in a kind of a checklist, and I failed. I failed to really understand what brings me to my intuition. But my intuition is very strong now. After a lot of failures and some very few success, I see people who will really do it, who will make it, and who are not going to make it, right? And I'm pretty good in this. So unfortunately, it took me 10 years, more than 10 years. It took me a lot of failures, and that's the experience you get. It's very, very expensive experience, I must say. But on the other front, I could not really still put it on. It's not algorithmic. It's intuition, more intuition than algorithmic. So I would really love to have an algorithm developed for that kind of things. But yeah, that's an interesting stuff. I'm sure that many VC entrepreneurs would love to have this tool in hands. Anyway, a co-pilot that tells what people are and what people are capable of. Okay, so yeah, let's probably just one more question about two more questions about stage of VC, PE. And then we can go to discuss the future of AI as our last section of our discussion. So my question is all about what is number one, number two priorities for venture funds these days. So you speak to a lot of venture funds. I've seen a line of people, line of investors, maybe not only venture funds, but everyone who is investing in private equity and venture, being it professional managers or family offices. What's their their current state of mind? What are the problems they're facing, you think? What are top three, if you may name? Mohammad, Philip, who wants to start or add?
Yeah, so I guess you're referring to their questions about AI and how AI can support them, right? Because broadly, VCs and PEs are facing competitive environment right now, more for VCs, honestly, because of the risk-averse version of the LPs that we are facing in 2024. And there are news about extended downturn economy and all the geopolitical risks and others. So generally, people are in risk-averse mode of investment. And that manifests itself in twofold. Number one is the current portfolio that alternative investment has. They have to be more hands-on in terms of driving the value from portfolio. I think it's very clear ever since like early 2023, which I was leading the AI transformation for McKinsey clients. It was very clear that funds had realized that they should put their sleeves up and go and fix those companies and generate value, because it's not the time that you can easily do leveraged investment and use the high interest rates that you had, low interest rates. Now, what it means for their portfolio company is more hands-on, more operational efficiency they should bring. What it means internally for them is more careful deals, better insights, like explore the space better, have sharper insights, don't do mistakes, and be more efficient with everything you do, right? So the mix of these two efforts, if you look at them and what's driving them at the core these days, you come back to AI. Because what is driving the operational efficiency? What's the main, is like low-hanging fruit with AI is, there's this report by BCG that 35% efficiency, operational efficiency by generative AI within 1 year is feasible almost across industry, right? That's like a great news for a fund manager who has portfolio companies in different sectors. And quite the other way around. If you don't look at AI, if you're owning an education portfolio or a media portfolio or sales marketing, you are going to be behind the curve. You don't want to be in that position. So AI becomes important for portfolio manager. In the same way, when you think about sharper insights and operational efficiency internally and better investments, that's again where AI comes to the picture and plays a strong role. You want to make sure you read every article online, every single piece of information in your deal room and data room, and don't miss anything, and move faster and look at everything and write your memos, investment memos, due diligence and others in a better way and sharper way. So it comes nicely, all of these forces comes nicely to use of AI across the board.
Okay. And how do you think VC industry, PE industry could be disrupted if you just have any ideas, any ways you see it's going to be disrupted with or without AI? I mean, what could that be? I mean, obviously, VC investment, at least in like 2020, 2021, became much broader, right? So there were a lot of newcomers to this market, right? It was very small professional industry before that, and then it just emerged into something much bigger. Then like everybody was doing like syndicated deals. A lot of this fund raising platforms emerged. So basically, you could have been completely unsophisticated investor with like a bunch of dollars in the pocket and still like investing in companies like Stripe, right? Just putting like $100 into Stripe through like syndicated deals. I mean, it all happened. So do you think it is a real disruption for PE venture? You just were speaking about this club deals, right? Club environment. So you need still to shake hands. You still need to be a member of a club to be in a good deal. Do you think it will continue to be like that, or it will somehow emerge into something like more commodity thing where you can easily like invest with the click of a button to anything you want, basically? Do you think it's like coming that way with all this tokenization, ICOs and everything? Or you feel like it will still be where it is now, like club deals, more sophisticated investors and limited access to the deals?
Probably a mixture of the two. I don't think it's going to be completely like you described, where you can invest with the click of a button. It's just like a too highly regulated industry. It's too complicated for doing that. You can't just have unsophisticated investors go and like, invest into VC or PE or something like this. Like, I mean, they have to have some knowledge. So I don't think it's going to go completely that way. But certainly like various parts of the kind of like deal funnel can be made a lot more efficient. Like the deal signing can be made more efficient in the top of the funnel, and a lot more kind of customized for sure for the funds, so that not everybody goes to a database and just searches and kind of sorts everything by AUM and then everybody's trying to compete for the same deal. But like, and definitely you can have tools, and one of them we're building where you go and like you basically get much more tailored recommendations to your portfolio strategy and so on. And then going further down the funnel, like as Mohammad described, all the kind of like insight extraction, all the kind of document analysis, all of that can be made a lot more kind of sophisticated, a lot less, create less friction. So I think it won't be that there's going to be one click in the end, but I think a lot of the things that at the moment require, analysts to work until 2 a.m. on Excel, that will be a lot more automated so that you can have like less friction in this entire process.
I think what Phil said is definitely, just add quickly to that. So like I think what Phil said is definitely like a more predictive, like a mainstream scenario for the future. And that's why what we believe in AIx2, that AI is going to be augmented. And we mentioned that before. I want to just put out that there are some very ambitious people out there who are trying to have end-to-end AI investors. And I'm talking about like $1 billion funds. We had this European fund approached us and they wanted to start a new $1 billion fund, which is totally run by AI. And they were very bullish about the idea. And if you look at the idea, it's not only like the mega funds, the likes of KKR, Partners Group, BlackRock, and a bunch of others, EQT and others, they have been pursuing that idea from 5 years ago. So that's not new to the industry. The use of AI in a very bullish way to find a deal, then maybe run end to end, is something that investors are chasing and dreaming for. So let's see how it rolls out. AI has been always unpredictable and getting us off guard. But I think the mainstream scenario, considering how the industry is evolving, is what just Philipp mentioned.
I agree. And I think that you can actually probably evolve to the stage of like AI where AI does like everything related to due diligence, everything related to research, producing an investment memo, and even making an investment decision, right? Maybe better than a human. So I think it is possible. Better than average human and then better than best human, right? That's how it evolves. But I don't think that still like connections will disappear and network will disappear and club deals will disappear from the stage soon enough, right? So I'm always thinking about my industry being a middleman. I'm a middleman, right? I'm a middleman who's taking money from one investors and then investing into companies. Why investors could not do it directly, right? So every agent, every middleman will be eliminated at some point. I don't know, traders, right? No traders anymore. It's all a machine. Real estate agents, insurance agents, whatever, banking agents, they are all slowly but steadily eliminated because technology actually is democratizing things, right? So it becomes less autonomous, if you will, if it becomes less an asymmetry of information, right? So you can just match things together without like a middleman. But our business is yet a very much a club business where you need to have connections, where you need to have close relationship. And I think that at some point, venture business will all be without a middleman, without a venture entrepreneur. But it will be the last business to get, which will be like out of this middleman market, because it is pretty much like a handshake business, right? You just still need to know a person. This person, this is his baby, right? I'm gonna like take a stranger to your business of your next round. I'm gonna take it from the crowd. You probably would want to have someone whom you rely upon, whom you know, right? So if I come to you, say, guys, I want to invest, or others will do like whom you don't know, you would prefer me, right? Because probably, right? Because you know me, right? Because you know what to expect. And I think that that's the business which is still there for like a decade, at least what I tell to my friends and colleagues, that for my generation, it would be more than enough to sustain this business and continue doing what I'm doing. So at least, we have like little bit time left. Let's speak about the future of AI. Obviously I want to have some predictions from you guys. So Mohammad, what do you think when we will see a human-like Gen AI engine? How many years left before we like have it?
So that's a very hard question. That's $1 million question in the industry that everyone is looking at, and people have different opinions, right, about it. Like top-notch researchers and industry leaders. I guess the release of GPT-5 is going to be a major event for the industry, because if you see a large jump in that, it's going to be more promising and where we are with this industry. To put it from more history of progress for AI that could help us predict the future, AI, as mentioned in the last 15, 20 years, the major breakthroughs have been by having more and more data trained in larger and larger deep learning, deep neural networks. Now, where does this get us? We don't know, because even the progresses we had so far was unpredictable, right? Starting from the ImageNet competition and how neural network beat every other. I remember when I was a student undergrad, it was not as clear a neural network is the algorithm. People are doing all sort of research everywhere. Now it's like 99% of machine learning. So we will see this kind of feeding more and more data into larger and larger and tuning these mega machines where this will lead us. But I would say generally, I'm optimistic about alternative algorithms coming to the window and disrupting the whole thing for us. So it's
not LLMs, right? Not LLMs. It should be something different, right? So if I heard you right, with LLM, it's a dead end, right? You're not going to deliver a human-like brain, whatever mind, based on LLM. So you could not make more models larger and larger to evolve into a real human being, right? So you need something else, new math.
I would say large language models, by definition, they're language models. So there's some limit to language and language models and natural language processing. We have image processing, we have other ways of calculation and function calling that is used these days to complement that missing part of large language models by function calling to other tools, right? So having something that mixes all of them is interesting. Maybe large language models can become the main power and call different tools to support them for mathematics, for reasoning, for other things. But we will see. But generative AI as a technology, not only for language, but other modes of audio, video, and others and reasoning is progressing. We should see how far we can go with that.
Okay. Interesting. So you didn't answer the question when, but at least you gave some prediction. Philip, do you have a date in mind, a year at least, when we will see a human-like Gen AI?
Not
Our
really.
listeners would love to have a date, exact date.
I think we, as Mohammad said, let's see where GPT-5 is performing. And then we will see if this exponential progress is continuing, right? Or if we're hitting a ceiling there. So if it's not going exponentially, then we know, so probably this is actually, we're at the end of this growth. And so we need to find a new kind of architecture to have exponential growth. So in that case, we don't know, can be quite far in the future. If it continues exponentially, then it should be quite soon, actually, 5 to 10 years, something like this. But yeah. I mean, I think this is a complicated question, and there's a multi-layered answer to it, I guess, as well, right? There's this really interesting kind of essay by Vitalik Buterin, who's always writing interesting stuff, and so about defensive acceleration, right? So he's saying basically hey. There are risks and then there are opportunities in going forward with AI, but also the goal is not to go backwards, because and one of the points of this essay is there are risks in delaying technologies as well, right? So on aggregate, our life expectancy in the world has increased by 20, 30 years over the last 100 years because we had this technological progress. So if we delayed it by 10 years, we could measure how many more people would die because we don't have this new technology. So I think AI, as you said, can go and solve many, many problems. And at the same time, it's going to create many, many more. So the question is, can we build technologies to actually reduce the problems that it creates? Because as we see in the world at the moment, delaying it and regulating it is probably not going to solve the problem, or not going to solve it completely. So that is one perspective. So maybe we can, there will be risks, but perhaps we can mitigate it with new technology. And on these risks, I mean, there's short-term, quite operational risks that you're using AI in kind of finance and so on. It can make bad decisions that are then kind of having quite big consequences, finance, medicine, and so on. And I think at the moment, the solution that we have for this is first of all, building test cases to make sure it works correctly. Secondly, kind of, having a human in the loop, so that there's some ways of mitigating that. And then we have the societal risks that you kind of talked about at the moment, which is hey, what do we all do if we're all out of a job because some kind of AI is replacing us? And that one, I'm less optimistic about that we will manage, because I think that's going to be a huge problem actually in the next couple of years, because all of our systems in society and all of our status systems, they're all built around this idea of productivity. And so if we can no longer be productive, and we don't have anything to basically kind of, our social systems are not prepared for basically a society that doesn't work because everything's done by computers, I think we'll have a really bad time for a couple of years until we figure that out. So that I think is a pretty big risk that is going to come whenever most of the jobs are being replaced by that. Let's see when that happens. I also hope, as you said, that this is more than 10 years away, but we don't know.
I mean, there is a dilemma, like philosophical dilemma, if you will. I mean, if it is a real superhuman and it is like more intelligent than every one of us, how can we regulate it, right? I mean, isn't it something what should regulate us? Because it is like a high level of not authority, but at least intelligence. So is it good if monkeys will start regulate human beings in our society? So if it just evolves to the stage where we are monkeys compared to this superhuman being, is it good that we will start like regulating it instead of it being regulating us? So that's a very big conceptual thing, which I hope people will somehow discover how to deal with that.
Yeah, there's a field on research that is trying to do that as well. And I think at the moment, people are quite skeptical that you can do it, because if you have an AI that is so much more kind of intelligent than you, there's just no way to regulate it. So like this AI is going to kill us all type of thing is yet another kind of conversation that is unsolved. Yeah. But I'm a little bit more concerned about the immediate kind of impact. I mean, if an AI is going to kill us all, there's very little we can do about it. So not as actionable.
I'm more concerned about a very powerful tool in the hands of unresponsible people rather than just a tool of itself. So I know we are cautious of time. We have only a few minutes left. So how much you think, Mohammad, how much you think AI is a hype and when it all will collapse? If it is a hype, it should get to some level of instability. I mean, just investment. I'm not speaking about AI itself, but investments in AI. Will it be the same as with any other hype, or it's a different type of hype where everyone is going to win? As in every hype, like 95% are losers and 5% are big winners. And I have a sense that this AI is overhyped, that like in every given hype, the prediction that it will just boost everything, it will so much influence the technology and productivity and everything, is a little bit exaggerated because adoption takes longer. So is it true, or you think it is like a different way of AI this time?
First of all, I do agree with you. I think there's some hype around AI. And the underlying reason for that hype is the misunderstanding of people about what AI can do and what it cannot do yet, right? So I think in short term, there's some hype. In long term, I think it's okay. It's correct vision. The AI is going to deliver what people think it's going to deliver. But in short vision, particularly AI, while it's rapidly changing, it's a moving target, it's rapidly improving. It is still not 100% accurate. It still hallucinates way less than a year ago, but still hallucinates. And it still cannot do complicated reasoning, right? And connecting like complicated, like I work with funds, right? Sometimes funds come to us and my first job is to make sure they really understand what AI is and what it cannot do. It cannot answer, should I invest in a very complicated scenario or not? Like, no, you're going to break it into smaller pieces and let the machine answer smaller questions. But yes, maybe down the line, and I'm very optimistic about it, AI is getting faster and faster in logics and understanding. Now, there is some hype. I have friends who are doing research in the technology development and technology history, and they are exactly trying to answer this question: is this hype, or it's going to be or it's like correct? It's going to deliver on funds. I remember my own advisor, my PhD advisor, Demos, who finished his PhD in 70s in MIT, and as I said, he has solved the open questions on multi-arm bandit, one of the leading thoughts about those kind of algorithms for AI. He told us when we were students and AI was quite a hype, that AI was even larger hype in 70s about expert systems. And everyone was talking about it. So this is not the first time we had a big hype about AI. We had it like 2-3 times so far. And it didn't deliver those times. What is different this time? And that's the question my friends in Stanford and other places who work on history of technology are trying to address. And generally, while it's like a research in academia, and I'm not an expert to talk about it, I can just tell the general message I've heard, which is if you measure this hype versus like reality for technology, there are 3 degrees, like electricity, engines, and others are real technologies that changed our life, right? There are 3 things. It's like how omnipresent they are in different, not only like one industry everywhere. Second is how like low cost of implementation they are, right? AI was expensive like 2 years ago, but now it's commercialized and it's like in all the industries. And third one is how much like it basically quickly can result in operational efficiency. So people can see the results quickly, immediately. The mix of these three is somehow nicely combined in generative AI, in commercialization of large language models, starting from writing your emails and Valentine plans with ChatGPT, right? So that's why people think this wave of AI is going to be different, it's going to be persistent, it's rapidly growing. So while I do agree with you, and I think there's some hype because of misunderstandings, I think that's a technology that its impact is going to remain. And it's not going to fade away in the way that the previous waves of AI faded in their process.
But there will be still only a few winners, right? I mean, there are so many startups, they all could not win, right? And now my friends, founders, they say that if you're not AI, you could not raise money. If you are like SaaS, enterprise, business, anything else, not AI. And it was the same for blockchain like 5 years ago, right? If you're not a blockchain company, nobody is going to invest into you. And we know that 95% of blockchain companies failed, and blockchain is not yet there, although it's a very powerful technology which can definitely change the world of financial industry a lot, right? And assets distribution and exchange. Thank you very much, Mohammad and Philipp. It was Mohammad Rasouli and Philipp Reineke, founders of AIx2.ai, and Victor Orlovski, the founder of podcast Ventures from the Valley, brought to you by R136 Ventures. Thank you so much, and enjoy time, and hope to see you soon.
Thank you.
Thank you. It was a pleasure.
Thank you, Mohammad. Thank you, Philip. Ventures from the Valley is brought to you by R136 Ventures. To find out more about R136 Ventures and how we scale mid to late stage startups by unlocking their true potential through investment, visit r136.vc. We will be back soon. In the meantime, make sure to click subscribe so you don't miss any further episodes. On behalf of our team here at R136 Ventures, thanks for listening.